All right, do a really quick demo just to show some of the members the more basic stuff. Let me pull up a public chat. I'm going to tell the public group, name any coin. And we'll see what they say. In the meantime, let's do this. Let's get BTC up because that's one I'll use as an example. Or, you know what, I'm going to do some alts. But BTC is already up. So the question was, how do you know when to move your stop losses up? Because I was explaining to the group how you don't even need to take profit. I barely ever take profit anymore. I just move up my stop losses. And there's certain strategies with respect to doing that that take time to master, and certain concepts we'll have to discuss if you want to get into it in more detail. But there are essentially ways to trade almost entirely risk-free, getting very close to trading risk-free. And you could get to the point where you could trade with such minimal risk that the worst case scenario is you lose your fees on the trade, but you don't take a loss besides that. So it's pretty amazing stuff. One of the main strategies we use in the group, and one of the things that we talk about when we do live streams and calls and Vader University sessions where we do training stuff, is my Ichima strategy with my EMAs and Ichimoku. I've done a couple videos on it before that I've released to the public. In this case, you can see the 55 and 99 EMAs oriented with the 55 on top for a bull run, 55 on the bottom during a bear run. But if we take a random coin, say WPR, I'll do something that doesn't have so much stuff all over it. Let's grab GVT, should be a lot more clean. There we go. And let's take a look at the hourly. Beautiful. Wunderbar. In this particular instance, the target is we want to be able to enter into the trade, get the timing right, and then once we're in, we want to know when to move up our stop losses. So let's say this is the segment we're looking at. We're going to do a fib retracement from down here, up there, down to the bottom of that run. So say right now, we're right here. I'm going to put a little X there. This is where we currently are in time in this example. That is exactly where we're located. Imagine the rest of this chart beyond that point does not exist. We're trying to determine, all right, we got a little bounce there. It looks like that was the bottom, so we buy in. We put a stop loss down about 2%, 3% below our entry price. So say we place our stop loss right down here. Let's see, that would be 2.67%. below our entry price if we bought. Actually, we're not going to buy right at the bottom. You know what? That's a good point. All right, so say we're bouncing right here. We enter right there, halfway up the bounce. It's a 5% risk, 4.99%. There you go. So it's about 5% risk. Now, you enter right there. You want to get rid of that risk as quickly as you possibly can. So we start moving up, and then, oh no, we come back down. Your stop loss is down here, so you're not getting stopped out. You see it bounces again off of that bottom, and now we have a double bottom, which is actually a bearish indicator. A bullish, rather, indicator. Once you get that double bottom, now you're feeling more confident. You know what? This really is going to be a nice breakout. All right, let's keep going. So it moves up here. It gets up quite a bit. Now you're feeling a little more safe, and you say, all right, we're up several percent. Let's see if we can move our stop loss up a bit so we're not risking 5% anymore. So now we're going to take our stop loss. We're going to move our stop loss up to that bottom. So you figure we already had a double bottom. If we have a triple bottom, I won't get stopped out because your stop loss is going to be just a tiny bit below that bottom. So if you end up with a triple bottom, you don't get stopped out. And if it does break that line, your stop loss, and you get stopped out, that's a good thing because chances are if you had a double bottom and it looked like it was breaking out and then it came back down to retest it but it broke through, in all likelihood, it's going to keep going. It's not going to bounce right off of 1% below that triple bottom. Most likely, majority of the time, it's going to keep moving down from there. So now our entry was right over here, was at 11.5. So now, instead of 5%, if we go down to our current stop loss, you're now risking about 3%. So you've just reduced your exposure from 5% to 3%. So now the thing's chugging along. We dip down, but it doesn't quite hit our stop loss. It doesn't quite hit the triple bottom. It just comes down a little bit and tests, and then it moves up from there. So now we're really moving up. You're feeling really confident. Now we find another support. So we've crossed the EMAs in this situation. EMAs are an example of the supports I use. The Ichimoku cloud, so leading span A, leading span B down here on the red cloud, that's leading span A, that's leading span B. So those serve as support and resistance, and they're moving. So you actually have a mobile support and resistance, which can be very helpful in certain situations. You're not relegated to using Fibonacci. You could actually get an idea of directionality and the movement based on what the moving averages are doing in some cases. Same thing with the Ichimoku cloud. So we're getting up here. We're starting to gain more confidence. Once we break the EMAs and we see a crossover right here, now my confidence is sky high. Now I'm going to take my stop loss and I'm going to move it up to my entry. It's now a risk-free trade. It's now completely risk-free. I can't possibly lose any money on this trade. So right now, our stop loss is at 11.5, pretty much our entry price. Current price is right here where the EMAs crossed over. So now if that's the current price, which incidentally is the current price right now, then our current stop loss is at minus 3%, but you're at your entry price, so you can't possibly take a loss. Now, as things move up, you're going to have to find more supports. Every time it breaks a resistance, that becomes a support. Now you're going to use that support to help you place your stop losses. So in this case, we're going to move up and we finally break through that 236, and then we get a really impulsive sequence with these motive waves breaking up. So we're going to have a 382 right here that previously accounted for a lot of trading. There was a lot of trading occurring in this range right here, bouncing back and forth. Getting support, getting resistance, but it was bouncing in that general region. Once we clear that and we're home free, we're scot-free, we're out of that trouble area, that resistance zone, now we're free to move our stop losses up again, and now is where it gets really interesting. Now we have a 236 right there, which can serve as a support. It's also placed pretty much right on point with the moving averages and the Ichimoku cloud with leading span A on the top of the green Ichi cloud. So if we're getting up to here to that 382, we have our stop loss down here just below this fib level. So no matter what, you already have profit locked in. So we bought in at 11.5, and our new stop loss is up here. We're now at a 5% gain, no matter what. Now, in reality, the coin's currently valued at an 11% gain, but you only locked in 5%. But some people in this particular instance would sell when they were 11% up and say, all right, I'm taking profit. As soon as it crosses as 382, that's my target. I'm going to sell. We're not going to do that, and this is why. Once we break that 382, we can now move our stop loss up because that was such a strong resistance before. We now have a strong support. Once we get above that, we can move our stop loss to an area just below it. So instead of taking out your profit when you're 11% up, we're going to leave our profit there. We're going to leave our entire position but move our stop loss up, and now we're locking in 9.5%. So instead of 11%, we have 9.5% locked in. Now if the thing comes down, you're going to say, shit, I should have just sold and taken my profit, and I would have gotten 11%. Instead, I only got 9.5%. You may say that, and that may be kind of annoying that you missed out on 1.5%, but all it takes is one time where you're right when this happens, and the difference is not going to be, I should have sold at 11 because now I only got 9.5 and I lost out on 1%. The difference is going to be, thank God I didn't sell at 11, because by not selling at 11, I've now locked in profits at 25%. So it's a much, much bigger difference on the upside. So just one more quick example. We've gotten up to the 382. We've broken that. Now we're going to keep moving. We get a really strong and impulsive move. Now we broke that 0.5 fib. We're getting more space between our price action and the 55 EMA. The EMAs, the exponential moving averages, are diverging. They're moving further away from each other, and they're doing so quickly, which is an indication of a very, very bullish setup. Now we're going to look for other supports. I'm not going to go much further with this. But just to give you an idea of one more example, if you were to make it all the way up to the top here, we got rejected by the 786. This was a strong rejection at the 786 with multiple hourly candles attempting and failing. If we go back in time, we'll see that same line right there was responsible for a couple other major rejections. This super strong candle, that wick barely broke through. Got a rejection here. We didn't quite make it up that time, but we also didn't break it. So that's a really strong resistance for us right now. So once we break through that, you can move up your stop losses again. Now imagine for a second, you got into that trade when I gave you the example where we started at 11.5. And now we move our stop loss up here to just below that 786 as soon as we cross it. Now the situation you're in is you have locked in and guaranteed yourself a 25.25% profit. Now, if you had taken profit instead of moving up your stop losses, you would have sold at the 382 and taken 11% profit. So now, not only have you gotten more than double your profit, but you've perfected a strategy that you can apply to every trade you get into in the future. And if you are wrong, if you're using the strategy correctly, the worst thing that could ever possibly happen to you is you lose a couple dollars, your fees on the trade. If you get to the point where you're trading risk-free, so you buy in right here, you go up just enough to move your stop loss up to your entry price, and now you're risk-free, and all you lose are the fees that Binance charges you to make the trade. Once you get to that point, you're on fire, and the only way you fail beyond that is if you can't get to that risk-free level. If you buy in and you're not getting the right entries, and then after you buy in, the price comes right back down. But even if that happens, worst case scenario, say the price tanks immediately after you buy it. If you're setting your stop losses at 2.5%, 3%, you're taking a pretty small loss. And one of the most important concepts that I teach my members, my friends who I trade with, is I can be wrong 9 out of 10 times. Say we're wrong, and 9 out of 10 times the coin crashes in price and we lose that 3% because of the stop loss. But one time I'm right. And the one time I'm right, we make 25%. So who cares if you lose 3% on a bunch of other trades? If you're making 25% on 2 or 3 trades out of 10, or even 1 trade out of 10, we're going to be making profit. And that's all that matters. The name of the game is making profits. And in our case, mitigating risk to increase our profits. And that's exactly what we did using that trading strategy here, something that you can perfect. If you get good enough at it, you can essentially trade on alts, whether it's a bull market or a bear market, find the right plays, make the right calls, use the right strategy, and make bank without ever risking more than a few bucks. It's pretty amazing. Just takes practice. So don't try to join a group looking for signals. Whether it's me or whether it's some other group, find somebody who has the experience, who knows what they're doing, who can give you the right education and the right tips. And hopefully you can get to the point where you develop your own strategy and you're able to trade in a low-risk environment that's able to produce substantial rewards. And in my case, it's been incredible what I've been able to do with this market, even though it's been pretty bearish. So good luck. If you guys have any questions, let me know. I'm always happy to help, but my time is limited. So if you really want help and you want to do some educational work, feel free to join the group. I love teaching and sharing my knowledge and experience with the guys, so we'd be happy to have you. Thanks.